we start with the equity assets. So equity assets are things like stock, then things like mutual funds. Then we have these treasury securities. Then we have like another one is the fixed income assets. So these are the bonds and the treasury bills and right now we also have certificate of deposit from banks. Then we have real assets. Okay, people call it real assets, like land. People call it like land, like real estate. Sometime back, I was discussing about rates. So that forms part of real assets. Then we have cash and cash equivalent. That is what you have in cash. And now the money market. Because money market it's also too liquid.
Oh yeah.
Then the other one we have are alternative assets. That is where we have venture capital. I know we've heard about venture capital in the Kenyan market, and we have cryptocurrencies. So the crypto is classified as alternative assets. Yeah, and any virtual coin.
Hello everyone and welcome back to the Balance It podcast. Balance It is a platform that empowers young men and women to live a purposeful life.
We delve into conversations relating to financial well-being, purpose, entrepreneurship, fitness, and abroad experiences. I'm your host, I'm Gertrude Nasike.
And I'm Eda Onyoni. And yes, definitely on the seat today, as you can see, guys, we are honored to have a guest again, and we are grateful to all our guests that are actually available for us to just share your expertise out to our viewers. And today's episode, we will be discussing on something very crucial, as you guys can be able to feel and understand throughout the whole episode. And now at this juncture, to our guest, I am going to invite you to introduce yourself. Just tell us who you are, what you do, and something else that the viewers should know about you.
Okay. Thank you very much for inviting me to have this discussion about finances. My name is Wilfred Okeyo, and what I do for a living or for fun.
For a living and fun. It can be both. Feel at home.
Yeah, okay. No, I'm an accountant by profession. So that is what I'm currently doing. And right now I'm dwelling in internal controls. And what I do for fun, I like thinking. And I think that's why the kind of games I play are mind intriguing, like games that make you think a lot, like chess. And I also like reading financial books. Yeah.
Oh, wow.
That is where he is here.
And I feel like that just paved way for our discussion today, because as he said, today he's going to speak about finances and we're going to delve more into investments. So just to start us off, how should we invest wisely as maybe young people? Because right now we're talking to mostly young people. How do you think we should invest wisely, and could you also share investment options available for us?
Yeah, thanks a lot. But before we get into how someone can invest wisely, I normally like maybe talking about finances first. Like before you invest, you must have a source. Like you must be able to know like what's your source of income, where is this money coming from? Because in most of the areas where people invest in these avenues, they will always ask you to take in like your source of fund. So when we are talking about advising people, discussing about this issue, like we should be able to know like this person's source of fund, is he in active employment or doing
Yeah.
business or so if you know that as an individual, now you can be able to program yourself and look at the available options and avenues on how you can. So the first thing is it normally starts with the understanding your source of income. Yeah. So I think that is the basis. Then if I would go further, so there are different investment options, but again it depends with some. So it depends. We have like a number of factors to consider when we are thinking of the options. Like, so first you look at the age, like age of an individual. Like for some of us, okay, let me talk about. I first heard about investment when I was at the university, but I was just hearing it from people, but I did not take keen interest into it. If I did take a keen interest, maybe right now it would be a different story. But it's never too late to start. So you look at the age, you look at the financial goals of an individual. You can ask yourself, what is your goal? You understand? Why do you want to invest? Because you have to understand your goal, then you can be able to look at the available options. Then you can say, okay, this one suits me best. So you look at the age, you look at the financial goals, you look at the risk appetite. Are you risk averse? Are you risk averse? Are you a risk taker? So if you understand that very well, then you can be able to know. Then again, the lifestyle. Someone's lifestyle also tells a lot, because we can talk of an option that this person, if you look at their their need, want, and saving ratio, like this person is the needs and the wants takes 80% of the income. They remain with 20. So if you tell this person to invest in a particular point, it's a red alert. So you look at someone's lifestyle and then someone's ego. So the last one, people normally don't want to talk about it because, but the ego. Actually, I was listening to some podcast and a guy was saying like that could be maybe the fourth or the fifth thing to look at. What is your ego? Because that one also affects the decision you are going to make on the investment options.
Wow, the ego one is a new thing for me. I had not heard about it.
So what kind of, we have talked about the different factors that can help us now decide whether the kind of option that we want to focus on is good for us or not. But what kind of these investment options do we have in our generation, I can say?
Okay. So I would maybe talk about assets, to be specific. So we have different classes of assets. Then now from those classes of assets, we have got subcategories. Then now from the subcategories, now as an individual, like as Wilfred, I have things that are of keen interest to me. You might have yours. So like now, if we talk of, if we start with the equity assets. So equity assets are things like stock, then things like mutual funds. Then we have these treasury securities. Then we have like another one is the fixed income assets. So these are the bonds and the treasury bills and right now they also have certificate of deposit from banks. Then we have real assets. Okay, people call it real assets, like land. People call it like land, like real estate. Sometime back, I was discussing with Chichu about rates. So that forms part of real assets. Then we have cash and cash equivalent. That is what you have in cash. And now the money market. Because money market it's also too liquid. Then the other one we have are alternative assets. That is where we have venture capital. I know we've heard about venture capital in the Kenyan market. And we have cryptocurrencies. So the crypto is classified as alternative assets. And any virtual coin.
Wow, and I would just like to know, for those of us or the audience who don't know exactly what, let's say, mutual funds are and these other specific assets? Because at least for shares and stocks and bonds, we've heard of them a number of times. But what about these mutual funds and these other alternative? Could you please maybe go into a little bit detail about them?
Yeah, so like if you talk of okay, now you said like people have an understanding of the shares, because you know that way you can just go into the market. Like if you're from Kenya, you go to Nairobi Stock Exchange. If you're from US or the South, you go to New York Stock Exchange. But now when we talk about the mutual fund, so we have fund managers. So these guys, like, they come and people pull resources. Like for example, like if you talk about fund manager, maybe if I am a fund manager, I'll be managing funds for people. Then now I will be classifying how I will invest this money that I'm collecting from people. Like you'll see like some investment will go to these different classes of assets that we've talked to or about. But on mutual funds, what makes it mutual fund? Like most of the time you will see like the rate of return on it is very low. And again, what they invest in, like their portfolio, they invest in low risky assets, like very low risky assets. And so we, on the mutual fund, we have different denominations. So we have like Kenya shilling, for example, because we're from Kenya. Then we have USD backed denomination. And of late, I don't know why people have their different reasons, but I'm seeing people moving towards US backed denomination. I think because of the currency risk and the inflation.
I'm also interested to know about you mentioned the venture capital. Venture capital, how does that work, and how can actually people invest in that? Because I have not heard of it from so many people.
Yeah, so I came across it when I was just doing my my readings as alternative assets. So if you look at for example, if we talk about crypto, this is just a virtual coin or wallet. So most of these alternative assets, like most of them are virtual. They're just wallets. But on venture capital, sometime back it had an issue in Kenya and it went a little bit slow. So I don't know. I don't know why people don't want to talk about it so much. But what I know, what is there on the search engines, that it had some issues sometime back, and I think that's why it went slow. But I mean, people can still look at other alternative assets. But my question to you people, why would you go to alternative assets? Okay, my bad, but from the beginning of the word alternative.
I just see you hijacked our podcast.
No,
but anyway, let me start. For me, I would say, from the word alternative assets, as much as it's an alternative asset, yes, I might not go to it as my first point of investment, but I feel like the fact that it's an alternative, it means there's future for it. And maybe trends are showing that this might actually maybe not replace the current investments, but as technology is improving and things are just going the way they are right now, I feel like there's a high possibility of them being so much investments and gaining value later on. And then you don't want to get to that point and then people asking you, when other people are investing, what were you doing, So I wouldn't go to them as the first point of investment for me, but I wouldn't mind having a little stake or a little portion of my money going to that section, just to diversify my portfolio.
Yeah. Same concept with me. I wouldn't go to it as my primary investment, but definitely because it is an investment, it is a kind of investment either way. Despite being an alternative, it is still a kind of investment. And right now, people are even paying dowry with cryptocurrencies. I saw online there is a family that took, they took, I don't know how many cryptocurrencies, but somebody was actually paid dowry with cryptocurrency. So it means that as like long time ago when land was like the main asset, and now things have evolved to things like real estate, because before then definitely real estate was not so much connoted as a primary investment, but over time things has changed, and right now we are in the digital age, so we just have to move with the ages. As we like how things are evolving, we also have to evolve as well.
Yeah, for alternative assets, if you look at things like crypto, right now it's really doing well. Like if you look with the Donald winning the US election, the price of the Bitcoin really skyrocketed. So something like that, it's been classified as alternative asset, but it's really doing well. The people who have invested in that, and they're really doing well. But to those who have not invested in crypto like me, I was reading something yesterday night. It's called Spot Bitcoin EFT. Like there are companies that now will be bearing the risk that an investor would go through if I would have bought Bitcoin directly. So these companies, like they manage everything for you. You just like you can buy Bitcoin through them. They manage everything. You pay them management fee, and at least the risk is not too much on the investor. So what I would say, like on the alternative assets, if you're a newbie, you just like you can get in through a company. Of course, you do your due diligence.
Yes.
And just identify a company that can suit you. Because with something like Bitcoin, I was talking to my friend, and it's like, if you lose your key, you lose everything. You understand? So it's I mean, if it has a lot of security issues. If you lose your key, he was saying, if you forget your password and man. So if I'm to get to that, I will identify maybe a company or some guys that are that are out there to bear the risk. Then I can get in through them.
Yeah, for sure.
Yeah. Then you asked me something about venture capital. So personally, I've had friends who have started up businesses, like the startups. So by then, like what I contributed as venture capital in that scenario was my technical expertise and maybe management expertise, because currently those things are also classified as venture capital. But there are also investment banks. There are also individual investors. There are financial institutions that have these kind of arrangements called private equity. Because maybe these startups, they're not listed. They're not listed in the stock exchange, so they cannot raise. They cannot issue. They cannot issue out shares to buy. So they only get maybe money through private equities, and that is where the venture capital comes in. Yeah, but for me, I'm still a small firm, so any venture capital, like I would offer if it is in the line of business, maybe if maybe it's a startup and they need something with maybe maybe accounting knowledge or some expertise, I can come in. So I can just offer maybe my technical experience and maybe a bit of managerial expertise. So if you guys come across someone who is that, then yeah,
I think I'll talk to you.
Yeah, but it's an interesting area, to be honest, because of the most of the startups, like any startup in the field of tech, it has a long-term growth potential. And while we were growing up, we used to see this thing, the lion den or something. I think the sharks. These this guy Chandaria, the sun. The sun. They used to be in some lions den, and people would go there and pitch their ideas like I need maybe 30,000 USD for 2% equity. That is venture capital.
Wow. And I feel like we've really gone into detail, which is very good. Could you now just share some of these platforms? Because you've said for you've not invested in the alternative investments, but I'm assuming maybe the shares and stocks. Could you share some of these platforms that people can use while investing in this?
Yeah, so I would say any platform that I'm gonna mention here, I'm not doing any marketing for anybody. So and I believe they will also not pay you people to market for them, right?
But they can pay us.
So what I would say, before you even go into platform, what I always tell my people, my friends, or anybody, is you have to identify, like, for example, if you want to go into equity assets, maybe you want to go into stock, right? So first you look at you do your analysis. For example, like the dividend giant of Africa, Nairobi Stock Exchange, man, I like that. So when you go to, even when you just search like NSC, you'll see like these are the companies. This is how they've performed. You look at the dividend payout, how they've been paying their dividends and everything. You look at their financials. So you see, me being an accounting guy, like I look into the financials. I see like this is how they've been doing this, the debt equity ratio. This is all they have, and after that, so that is part of due diligence. To be honest, investments. Even those who are listening, don't listen to this podcast, then you go and invest. Do your due diligence. You understand? Like if you invest and tell me, oh, Wilfred, I bought this number of shares, like maybe you bought shares from NIC, now it's NCBA, I think, and they paid this, then I come and buy, but I would not have done my due diligence. I bought it because you told me. So if things go bad, I'm gonna blame you. You understand? For example, like even in circles or in money market, if people do their part very well, people do their due diligence, you will not be hearing these cases of people being conned, being scammed, etc. So that really plays a big role. Like we normally call it due diligence. You understand? So if your due diligence is okay, you can listen to financial podcasts, everything. And again, only 20% of people who invest they get their financial literacy from what we are now saying. A number is just their due diligence and everything. So if you do your due diligence very well, like for example, we were talking about equity asset, like for example stocks. You see, like you've done your due diligence. You're now certain that you are going into this specific area. Like for me, for example, I would look at the banking industry. Very nice, then the banks that you get into, look at banks that are diversifying, for example. Banks like that are diversifying, like right now you see banks are going into insurance, like that, diversifying their portfolio. Like if you look at their books, like they're really, so like I would tell, like if it is me, I would go into banking, I would go into insurance, I would go into energy, I would go into telecommunication, and if I still have something, I would go into agriculture. So you see, like my stock would be like maybe from 5 or 4 areas. That is a very good stock portfolio. You understand? Then now on choosing, like for stock, like you need to have a platform. So when you talk about a platform, like for me, like I use AIB, Axis Africa. The people will use that. So that is a broker. You need a broker. You understand? So for me, that is the broker I use. The people will use Kingdom Securities. That is from Cooperative Bank. The people will use KCB Capital from KCB. So like the different stock brokers. So you identify a stock broker and you buy shares. But as you buy shares, you need to have shock absorbers.
For sure.
Yeah, because shares it's a very volatile venture. Volatile, you understand?
Yeah.
Very volatile. Like sometimes I even don't look at it. Like I just let it rest. Then again, before you get into shares, you should ask yourself: are you getting there? What is your goal? Do you need capital gain or do you need dividend? You understand? Like for equity, like it should have a very a very long horizon. Like give it a number of years for you now to start experiencing, or for you to now start seeing the fruits of your money or of your investment. But if you put money there, like if you have 100K and you put it there and you need this 100K the following week, don't put it there. Like that's just the reality. You understand? Don't put it there. Yeah. So like just put money there, like money that you will not need it maybe in the next 3 to 5 years. I know it's an ambiguous word to use, that money you will not need, but that is the truth. You understand? If you put if you buy stock maybe for 500K, for example, then like this money you might need it maybe in 6 months or something, man. It will rain on you. Understand? So also you just look at that. So those are the platforms you can use for stock, and there are many out there. Just by due diligence, you can identify what suits you best. Yeah.
The shock absorbers, we need it. I remember there was a time I invested, like I bought stocks, shares for a specific company, not to mention, but it was actually a telecommunication company, and it was rising. Literally, we know this company, we don't know this company, and it was having like an upward trajectory. And then I bought shares. 2 months later, the share was decreasing. I couldn't handle it. I just removed my money from there. We had invested in my sister. I told her, let's remove our money from there.
You sold, right?
I sold. What do you mean? I just couldn't. But yeah, we need the shock absorbers when it comes to investing and just knowing our risk appetite. But now what I would like to know from you, do you think cryptocurrency is going to replace the physical currency?
I mean, before we get there, if you just want to know something, the reason why I was saying like any money you put into equities, let it be money that you are not going to need it like in the next 3 years or so. Like just give it a very long time span, because like what happened to you? People lose money out of panic selling. Understand? Like you get into the market in the evening and maybe your house manager is calling you, like the kid is crying and everything, and you just pick up some fish. Once you get home, you realize that this fish is not even ready. You understand? So that panic, people lose a lot of money. I have friends who have lost like a lot of money through that panic selling, because when the market is like that, the people will buy at a very lower rate.
Mm.
People like me. So we need people like you know, we will buy at a very lower rate. So you just leave it there. Like for example, NSC, you've seen those the industries that I've talked about. I would leave money there for maybe for dividend, like for a number of years. Then there are eventualities. But if someone is having an eventuality, why can't you sort that with MMF? Understand? So you just need to like just put your financial mindset in order. But if you just go like this and the market is very bad, like for example, like we know recently in the energy sector, once there is a company that I will mention because it's it's the public Kengen. They said like they made some profit. Everybody bought shares. You understand?
Yeah.
So and their shares are really skyrocketing. In fact, my shares with them, like if you look at the capital gain, like it really increased like by 20 something percent. You understand? So if my appetite for gain was high, I would have sold that. But I'm looking at the broader picture. You understand? Like maybe in 5 years or so, where will this company be? So yeah, if you have 100K, I would advise like you can even buy maybe 100 shares. Like in Nairobi Stock Exchange, I think the minimum is 100 shares. You'd rather buy 100 shares and let it be there than you buy 10,000 shares from a given company and you sell it the following week. Because sometimes you cannot get a buyer, then you sell it in the secondary market. The secondary market is like willing buyer, willing seller. You understand? So I mean that is it. And on crypto, you see, crypto is not like backed by any currency. But from what I'm seeing, like from what is happening in the West, to be specific in the US, I would not be in a position to say that it will replace any currency. But it is really coming like with some force. You understand? Like right now, like I think maybe in first quarter of 2025, maybe it can maybe go at 200K USD. And when people are buying this thing, it was really, maybe 2,000 you would get a coin. So people are really getting into this. And if you look at prominent business people like in the US, you look at someone like Elon. When he talks about crypto, man, you want to get into it. you understand? So that's why I'm saying like I would get into crypto because maybe I've done my due diligence. But not because maybe is making something. I was having a call with my friend like he invested like 350,000 I think, or 300,000. Right now is
Kenya shilling, sorry.
Kenya shilling. Right now his current value is around 800K Kenya shilling. Understand? So you see with that, if I'm someone who needs that, like I would maybe take some money and buy it. Who knows? The next minute, think that is it with investment. But again, when we started, we talked about age, factors to consider when you want to invest. Age, there's some age that if you lose some money like that, you can still dust yourself and better. You understand? So for maybe a young person losing some big money, like they still have years to live and rectify. But also in investment, you can never learn without losing.
True.
It's like teaching yourself how to ride a bike, how to ride a bicycle. I don't know these Milan bicycles. Like you have to fall for you to be a good bicycle rider. You understand?
I can relate. I have fallen, but I'm yet
Yes, to learn.
Yeah. So, but the way we said, there are companies that are now monitoring crypto, like index companies that are monitoring the movement and everything, and people are buying crypto through those companies. It's called spot Bitcoin EFT. So maybe people can go and do their research. As I've said, I will not say I have limited knowledge. I have a lot of knowledge about it, but I just don't want to just throw things here and there and they understand. Yeah.
Wow. And I've also noticed, just to add on what you said, there are also central banks in different countries have started thinking of coming up with digital currencies for their specific physical currency. Let's say, for instance, the Kenyan shilling. You find maybe the Central Bank of Kenya coming up with now a digital currency of the Kenya shilling. So this is also a trend I'm seeing other countries have started thinking in that line, because they're seeing actually crypto is like the future, and they don't want also to be left behind, because maybe they're thinking it might replace the hard cash, but who knows? Maybe we'll wait and see. And then just to talk about another thing. Right now you're hearing about inflation, and there are a number of crises and places, war, and just unsettled global conditions. How do you think we should invest as people, or how can we invest? Because you find in some areas people are saying life is so hard, things are hard, there's no money in circulation, but you still need to invest. Or you have other ones that you need to satisfy, but you still need to invest. Or you have very little money. For the small farmers like us, you have maybe 5,000 shillings savings aside, but you really need to diversify your portfolio. How can we manage to invest amidst all this?
That's a very interesting question that I normally ask myself that question every time I wake up.
Honesty.
I ask myself that every time I wake up. I ask myself. That's one of the hardest questions that I ask myself. And what I would say is there are things that normally just they affect the investment world. Number one is inflation. Number two is currency. So those are two risks that normally, it is everywhere. So the way I normally think about it, for example, if you look at the cash and cash equivalent asset, now when you talk of money market fund, I would not invest in any money market fund that gives me a return that is lower than the inflation rate in any country. You understand? For example, if the inflation rate is maybe 4%, 4 to 5%, give or take, then I would invest in a fund that gives me maybe guaranteed rate of return maybe 10% annually. You understand? So that you beat inflation. Anything that gives you a rate of return that equals the inflation rate or below the inflation rate, you'd rather eat that money. In simple terms. So that is it. Then another thing is now the currency risk. We are just talking, and if you look at a lot of studies that are being done in the US market, and whether we like it or not, we see USDs. It's a strong currency, and recently we had Trump was saying he doesn't think there's any country that is going to come up with the currency that is going to beat the USD, but we never know. Those are politics in the financial environment. But on currency risk, this is what I am always thinking about doing. I'm still doing my research about it, but that brings us to diversifying your portfolio. For example, if I'm from Kenya, I would say maybe my portfolio is 100%. I would say if possible, if 50% of my investment portfolio can be backed in a foreign currency, then you see that one now you are you're now safe on the currency risk. Maybe remember early this year and late last year, Kenya shilling was really weak against dollar. It was at 162. So if by then, if my investment was backed in USD, I would be okay. You understand?
Yeah.
But if it was backed in Kenya shilling, that exchange was like, it's really a thing. So then I normally start with my country. I look at the inflation rate in Kenya. I look at the currency risk. Then I now try to picture it out now globally. Because for example, if you look at the money market fund, maybe USD, you see right now I may not invest in the money market fund in USD denomination in Kenya, or rather I would invest in offshore stocks. You understand? Like I would go to companies that are in the US, like maybe Tesla, maybe Microsoft, Amazon, because that would really build my portfolio. Like if you invest in the offshore stocks, for example, you are guaranteed of maybe good return. Then you have access to the US market, for example. I'm just saying, wherever you invest in, but in the offshore stocks. So the thing is to just avoid or just to try and manage this global crisis, because inflation is something that is the currency, something like that. Let's just try and diversify our portfolio. Like I think that would really go a long way. But if you just invest in one currency, then you can be in for a root shock as well. Because, for example, when Kenya shilling was really growing weak, I bought some. That is when I opened my MMF, the USD MMF. So like I bought it in maybe I don't know, was it around February or March? Then after 1 or 2 months, the Kenyan currency stabilized again. So I bought it at 162. After 1 or 2 months, it came back to 129. Yeah.
What?
So
Shock absorbers.
yeah.
Why?
Yeah. So you see. So and it was I just had to compose myself and just I just face it. You understand? So that is why I'm saying like I did panic buying of USD when it was really high. You understand?
Yeah.
I went ahead and opened a USD MMF. I deposited money there. In less than 2 months, the Kenya shilling stabilized. And you remember the Kenyan politicians, they are fond of doing this. They issue, even they issue statements even by in funerals, by the roadside, and one of them I think is the PS Treasury. I think he was saying like those who have dollars, sell your dollars. You understand? Like some even said like the Kenya shilling will come back to 80 something, 86, where it used to be. So if you look at you bought it at 160, it's coming back to 80.
Half of your investment gone.
You understand? So it was really like, I think I'm just alive by God's grace. It really gave me a very big beating.
But you learned.
I learned. You understand?
Due diligence.
Yeah, I learned, and again, when things were now getting muddy, I withdrew my money. You understand? And I said, let me withdraw it. Let me get used to this loss. At least I can pick myself up, dust myself off, and move on. But what I learned with that is maybe I need to give a keen eye to the offshore stocks. Like I need to now approach the West and everything. So that is what I'm just saying. Like sometimes these things you can never know. Like even you can buy crypto.
Yeah.
You wake up, you find that it's gone. So that's why it's good to diversify. Like just diversify your portfolio.
Yeah.
Oh.
You people you look like you are pitying me. Huh?
No.
That's life.
No,
That's
for
why you're
her,
here to
she
share.
has shock absorbers. For me, I don't. I have them, but I've not tried them.
You
I've
need
not
to try
tested
them.
them.
Yeah.
I
But at
will.
least you're
I will.
learning from experts. who
Yeah,
are telling us.
so we won't make so many of the mistakes. as
Yeah,
well.
yeah. So maybe, Wilfred, as we are coming also to an end of the episode,
Mhm.
what are some of the ways that you think people should embrace in this generation to just be able to store wealth?
In order to store wealth.
Yeah.
Yeah, I think the thing is investment. I think is the way to go, because if you look at it in this angle, like while we were growing up,
Mhm.
we never used to hear people talk about investment.
Mhm.
Like back in the village, like there were no internet connection, there were no smartphones. It was just us listening to KBC and maybe But right now, people have access to everything.
Yeah.
You understand?
Mhm.
People have access to everything. So I think like it's just saving. I always say I'd rather go broke after saving than impress people with my money, and you always know that.
Mhm.
Maybe when you do some purchase, some impulse purchasing, then when you go home, the reality dawns on you now, like you understand.
Yeah.
So
You can relate.
okay.
And I cannot.
Sometime back.
Sometimes, but I'm a good
Yes.
student.
Yes.
Thanks to you.
Yeah. So for me, what I would say is people should just learn and embrace
Mhm.
the new culture
Mhm.
of investing
Yeah.
and saving.
Mhm.
I mean, that is the only way to go.
Mhm.
And again, as you invest, as you save, I will say like people should go, an inch higher and think of now how do they protect this money that they're saving.
Mhm.
You understand?
Yeah.
So maybe I can touch on that maybe for a few minutes.
Mhm.
But the thing is, I have friends
Mhm.
who normally tell me like when we get salary, they tell me like, Wilfred, pay yourself first. So to them, paying myself first is always getting these flashy things and everything.
Mhm.
And they normally don't know. For me, paying myself first is saving.
Mhm.
You understand?
Yeah.
Because I don't know about tomorrow. You see, for people who are in formal employment like us,
Mhm.
you rely on the paycheck.
Mhm.
So what if it's not there tomorrow? That is what brings us to me. But they have like maybe 3 or 4 MMFs. Like I have like an emergency MMF that's dedicated to emergency fund. One that's dedicated to maybe savings. One that's dedicated to sinking fund. Like I don't save money in bank. Right? It normally comes in and it leaves like immediately. I use bank as an escrow, like between my employer and with them. The money goes. You understand?
Yeah.
So like if you have like emergency fund, like for example, God forbid, if I lose job today, I always tell myself, and I go back home, I should be able to pay my rent maybe for 1 year without calling anybody. You understand? And within 1 year, you can get something to do.
Yeah.
That is the emergency fund. Maybe if someone gets sick, we don't like getting the insurance covers, but those are things that can protect this wealth that we are drying our backs trying to build. You understand? This insurance, and the last one is living a healthy lifestyle. You understand? Because we have not touched on pension, but that is also another thing. Like if you have pension, if I'm saving, I have some pension fund, some fund in Kenya, and I want to eat that money when I'm at my 60s. You understand? I just want to eat it, dress well, go to the market center. I don't know if you have market centers back at home. Go to the center, buy magazine. I want to eat it. I don't want to use that money, to go to the hospital. But what will send me to the hospital is the lifestyle that I'm living here now. I normally say like I'd rather pay like maybe 30,000 gym subscription. If you put 30,000 in your pension fund monthly, you eat the way you want, you live the way you want. You understand? in maybe 30 years or so, that money will be gone and it can be mad. So like I always say, even as we save, as you invest, the biggest investment is in your health. You know, a healthy lifestyle. I've seen people who have lived a healthy lifestyle and they're really doing well, even at their old age. They don't have these, they normally call them lifestyle diseases when you get old. Right now, you are young, they don't call them lifestyle diseases, you understand? But when you get old now is when they start giving them names and everything. So I think that one can also help us as young people to protect this wealth that people are building.
Wow, that's a really great way to end the show. And maybe just a last word to maybe someone out there who is thinking, oh, you guys are talking about so many investments, but I just have this little, maybe I just have 1,000. What can you tell them? Is it maybe they should change their mindset or attitude, or how can you advise them?
For me, what I would say is I normally have just one mantra, like just start. You understand?
Yeah.
Just start. Like if you go to NSE, you can buy 100 shares. If you look at there are companies that are selling their shares even at 0.45 or at 1 shilling, for example. If you go to MMF, I think the last time I checked, the minimum is maybe there are some that minimum payment is 1,000, for example. The others that are 2,500, 5,000, etc. So the thing is, just start. Money will never be. You will never get enough money to start. Understand? Yeah, that is what I would say. Maybe if you would have not started, you would have not have experienced that share panic thing. So just start. You understand? Even when I was coming here, if I had not left my apartment, I would not have been here.
For sure.
You understand?
True.
Yeah. So the thing is just start. Don't look at it like. Don't say like this money is too small. You know, you see that 1,000, you can eat maybe 30 donuts with it. You understand?
Why are you attacking donuts? Why?
Okay.
But why?
Okay, I don't know but the thing
But
is,
it's true.
the thing is, just start. We have some saying in my community. In my you are a fan of donuts, huh?
I'm changing my lifestyle.
So we have some saying like in my community. There was an old man that was advising the grandchild. So this old man used to tell the grandchild or the grandson, just start, my grandson. In my local dialect, you call it chaka chaka. Just start. You understand? So if you start, then you're gonna make the next move. And in investment, people don't. Okay, I don't have money. I don't use. I either learn or win. Like you learned. You understand? In one way or the other, you are going to learn. And there is nothing like the best decision in investing. The word best is relative. What might be best for is not best for, and it's not best for us. So that is what I would just crown it to just say like, just start from wherever you are.
Wow, thank you so much, Wilfred. Finally, where can people find you?
Where can people find me? Okay.
Yes.
I'm on social media platforms, but I'm active on X. Yeah, at Will_Okeyo. I think that is where I'm very active on. Yeah, I'm active on Instagram and etc. But you can find me on X.
We will post that in the description.
Yeah. Thank you so much. We are glad that you honored our invite to come to the podcast, and thank you for sharing your wisdom for us and for our viewers. Here on this podcast, it's all about learning from each other, and guys, we are getting first-hand information from these people, and we are also glad that we are also taking you on that same journey.
Yeah. And remember to share this episode because we need to transform lives through wellness.
Oh, me?
Yeah, you will also share. You'll also
Okay,
share.
yeah, sure.
And also to our viewers, until next time.
Bye-bye.